Hey folks, and welcome to this video. Today I'm just going to discuss a trade that I took on the EURUSD. And normally I just log these on the website like I've done for the past years, but I thought I'd pencil this one out in a video because I think it's a really nice way to learn is viewing things visually in a video. It's a little bit more interactive and there's more information and whatnot. So I just want to talk about this. Okay, so today it's Monday, the 15th of September. Let me see when we opened. Yeah, so we opened here this morning. This is Asia, and prices kind of sat around the open, and then we kind of went lower. We went below the open, and we made this really nice kind of a V, I suppose you could call. And this is essentially what I refer to as liquidity exploration. We have prices exploring the map for liquidity. And we had this low here, and we went below that low, and then we snapped up. And in the process, we made this pattern. And as a result of exploring liquidity down here, we were able to trade above these highs here. So here we have a small area of supply and a sell zone tested. Prices were able to trade above it as a result of visiting this low, okay, finding liquidity, the bids down below this low here. Okay, so prices came up, we traded above this low and into this little price structure here. Then we pulled down, we started to accumulate, and there's actually I think it was a 30-minute buy zone, no, 15-minute actually. That's what I had on my chart, okay, so the software found this in the default configuration, right? Was it the 30-minute? Which one was it? It was one of these buggers. All right, there it is. Okay, so here we have this area of demand. We went down, we formed it down here, below this low here. Then we rallied, we accumulated for a period of time, and then we kind of snapped higher there, leaving this buy zone just here. Okay, so the buy zone's here. If we project that over here, it's between this area of demand and the lows here. And prices kind of poked into there, and we're pretty content with the amount of liquidity identified there. Another thing I think is worth noting is these candles here, how we have all of these candles here are green. So we have push, 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 push. Okay, we didn't have kind of push, decline, push, decline. We had agreement. So there's a lot of strength in that, telling me that there's a lot of buying going on down here. All right, and so this gave me a lot of confidence in price kind of maybe staying in the buy zone and not necessarily going down into the area of demand, which we have just below, which is what happened. And so I got into this trade. I clicked into this trade here. On the 5-minute chart, it's a little bit clearer. I clicked in here when this candle closed. And the reason I did that is because we had something in here. First of all, like we always do, demand, tested. This is all micro demand. And it was removed by something in here, okay? This was tested several times, and it was removed by this candle here, okay? So this is the origin of that. And so you could box off this whole area here, looking like that. Prices went up, and I just clicked in at the trade here. A little bit of a bad price because we had this price inefficiency just here, liquidity void, and so prices would move through that typically easily. And this is what they did. They came back down. We went just below this area of demand here. We found some bids, picked up some bids, and this is where prices left from. Okay, so I took off the first portion here at the highs, and then I wanted to run for to the historical highs looking to the left. Well, let me show what that looks like. There is a high here. Yes, this blue one here. Prices came up to that, and then we left. And this is a slingshot just here, okay? And prices came right up to that level, and this is where it turned around. So I just clicked out as prices started to break down, not at the absolute high, but as prices started to move away here. We formed this little area of supply. We had departure, a sell zone established, and then prices just kind of drifting sideways. So I just clicked down here in anticipation of, price doing something else. Anyway, so that was the trade for today. if you want the indicator that I'm using that draws these higher time frame candles, you can get it on TradingView. Just search for Pipnotic HTF bars. It doesn't look quite like this. This is an update that's coming out. But essentially what it allows you to do, it allows you to define some either static or dynamic time frames. And if they're set to auto, both of these, it's going to jump several time frames higher. And the way I do this is, if you go back to the Smart Money Playbook, towards the end of the course, there's a section about time frames. It's under the framework section. If you go into the framework, there's something about time frames. And then I'm using the same implementation in this script as I outline in the course. So take a look at that. Okay, but you can say, well, I want the first one to be daily. Then this will change to daily. And I want the next one to be weekly. And then if I want to see that, I can just click on this. It'll show sit to. Then I can see the daily and the weekly on the same chart. And this is pretty handy. But if you put it on auto, both of these, the time frame will be calculated based on, New York is opening, based on the current time frame. Okay, I'm not going to show that. And then here we have showing the incomplete bar. So it's showing the one that's currently being, that's still open. You can see there are about 14 minutes left of that candle. Do the same for time frame 2. And then we have a few other settings like the gap, the placement of the candles, the gap between them, the space between the candles, the colors, the transparency and whatnot. Okay, so if you want that, go and take a look. It's freely available. Okay, I'm going to leave it at that. If you have any questions, thanks once again for watching.